Hello, I am Rajat and I am back with another YouTube video. This is my fifth YouTube video and a very interesting topic. Today I'll talk about, are we in an AI bubble? As you can see so on this video I did a lot of research. I worked on presenting that research in a beautiful way using multiple tools, and let's straight get into it. Are we in an AI bubble? Point number one. So first, let's understand what is a bubble. If you Google search what is an investment bubble, what is a financial bubble, you would find this very popular graph that says that a bubble goes through 5 stages. That number one is displacement. There is a new technology, a new promise is coming up that a lot of investors, people feel that has certain potential and value in it, and a few people start rallying towards that potential. So that is what we call displacement. Then there is a cycle of boom where there's a series of early returns that people see, and a lot more people follow in that phase. And this is where people start getting trapped in. As that boom continues, it gets media attention. Everyone talks about it. Even people who shouldn't and who have no relation to that industry or that segment start talking about it. Exactly what happened during dot-com bubble. Everyone was talking about dot-com internet and how it will change the world. Same thing that happened during the real estate bubble in USA, that everyone was getting loan and everyone was talking about how the stock market is going up, how the real estate never crashes. And then this continues with a lot of greed. There is a moment of euphoria, a lot of money gets poured, and then we see these mind boggling numbers being used as fundraising amounts, as revenue, and that is when we hit the point number 4, profit taking. A lot of people who were early, they see that bubble and they start selling their shares, and the moment that starts, there is a fear and panic selling begins, and then it all comes crashing down, and then in a few years we are back to where we started, just a few percentage up. And this has happened again and again for last 3 decades. We have had one financial crisis every decade. So first it was dot-com bubble, after that it was the real estate market bubble, then we had a COVID induced bubble 2019-2020, and right now we are in an AI bubble. So that's my reading. That's the reading of a lot of people around the world. Even though I myself work in an AI company and I myself work in the AI industry, I see a lot of use cases, a lot of bullshit, and a bunch of things around me. But while making up this research, I found a lot of interesting data points, and let's just quickly get into it. So what is a bubble? That's clear. Now let's get into what factors are out there in the industry that makes me believe, or makes a lot of people believe, that we are in an AI bubble. Yeah. So right now you would see that every few days there is a huge fundraising announcement from some investor into some AI company. Then there is an enormous chip buying deal, an enormous revenue sharing deal, a huge amount of funding that is being raised by AI infrastructure companies or AI wrappers. And then a very interesting observation here is that a lot of this money is circulating among same players in a circular way. So that is what we call circular spending. So here is a table, and then I'll also get into specific circular investing and circular money being traveling in the same companies again and again in a few minutes. So there are a few layers here. So these are the layers: VC, AI startups, models, hardware layer, returns. So what happens is that VCs hand over the money to startups. These startups are like Perplexity, Jasper, Character, Cursor, any startup that is an AI startup. And then these startups go and spend that money on the foundation models, which are OpenAI, Anthropic, Google. These foundation models spend that money on hardware layer, NVIDIA, AMD. Hardware layer money goes into building data centers, supplies, and then all of this returns show up on the stock market, as we saw in my video number 4. And then we see that public markets rise up. We see that, oh, we are making a lot of money. Then the cycle continues, and then we'll also get into specific examples of this. So this is how it is working right now. There are capital allocators who are putting money into startups. That goes to models. Models put that money into hardware layer. We see that return in valuation in public markets and on balance sheets. Then the cycle continues. Let's get into specific examples of how this is happening at a massive scale. So exhibit number 1, Microsoft invests $13 billion into OpenAI, and then they have an agreement that till 2030 OpenAI will give 20% of its revenue to Microsoft. So which basically means that Microsoft gives money to OpenAI, and then OpenAI gives 20% of that from the revenue, and then OpenAI also pays the server bills and the infrastructure bills to Microsoft. And Microsoft then reports it back as its own revenue, and then what that leads to is Microsoft's balance sheet and its revenue grows year on year, and then it reflects on the share market that for the last 5 years it has gone 137% up. Now this happens again and again in the industry. So if you look at this, so here is a very interesting data point. Okay, what happens is Nvidia is investing $100 billion into OpenAI, and this amount doesn't happen on a single day. It happens over a number of years in chunks, but it's a promised amount on paper. So Nvidia says to OpenAI, this is $100 billion, take it, and now we own a percentage of your company. OpenAI goes to Oracle, says that I want to do a $300 billion cloud deal, which means that I'll buy your cloud infrastructure and I'll pay you $300 billion over X number of years. Then when Oracle gets that deal, Oracle goes to Nvidia and says, I will buy $40 billion worth of chips from Nvidia, and that they will use that money to build data centers that OpenAI will use. And then at the same time, what also happens is that Larry Ellison, which is Oracle, they get a contract of $100 billion OpenAI's target deal. So all of this money is not real. This money is just on paper being circulated from one company to the other company in terms of multi-year deals, and what it is contributing to right now is immediate rise in the share value. Okay, so I don't want to rush ahead. Let's see one more example here. So OpenAI agrees to use computer chips from AMD. This is surprising because OpenAI is taking money from Nvidia, but then at the same time, AMD now what is happening is AMD offered OpenAI 10% of the company. Okay, so now 10% of OpenAI is owned by AMD, and then at this point what happens is that they are doing a $100 billion deal, which means that OpenAI promises that I'll buy $100 billion worth of chips from AMD, but at the same time AMD also owns 10% of OpenAI. So in a nutshell, what happens is AMD reports it on their multi-year projection that they'll be making $100 billion, okay, from OpenAI. At the same time, AMD itself owns 10% of OpenAI. Okay, so it's like I give you $100 and then you give that to your friend, and then your friend gives that to me back, and then all of us can report $100 earned on our balance sheet. But in reality, that money doesn't exist, and then all of us can do that several times over the years and show it as projections, build media hype around it, and then the share price will increase. So that is where we are in the AI era, and then we'll see a lot more interesting data points in this video that are very funny at the same time. It makes you fear that what is happening in the markets. So OpenAI expects to burn $115 billion till 2029, and then they also have this news or this media mention that currently they have a deal with Microsoft where they are paying 20% of their revenue to Microsoft, but then that number will go down to 8% by 2030. But till then, they are going to lose over $100 billion. And if you notice, they are going to lose $100 billion and more over the next 6 years. But at the same time, they are promising these deals worth $300 billion and more. So currently, a lot of this hinges on the ability of all these AI companies to continuously raise funds. to continuously keep that hype going on and not crash it down. So then Oracle signs this deal, and you can't connect the dots, and you can see that the money is not real at that scale. What is happening is that all these numbers are being thrown out, but OpenAI as a startup doesn't have that kind of balance sheet to pay, and all of these money is just circulating among a small player on paper. And it is not just OpenAI. Okay, there is nothing against OpenAI. It's a great product. I am also using it, but it is also happening across the industry. So let's see what is happening here in the case of Anthropic. Anthropic raised $13 billion from all these VCs, and then Anthropic has one of the biggest customer Anthropic has is Cursor. Cursor is paying like huge amount of money to buy tokens for its users, and then both of these companies are funded by VCs. So VCs are giving money to Anthropic. They have a huge valuation. On paper it looks like VCs, whatever money they put into it, is being valued at like multiple billions of dollars. And then at the same time, similar VCs have put money on Cursor. At the same time, both of these companies are losing money. So and then what kind of cloud provider is gaining out of this? So Amazon has a multi-year cloud deal with Anthropic. In November 2024, Amazon invested $4 billion, doubling its total amount. And then Google also invested money in Anthropic. So Anthropic is kind of purchasing compute power from both of these companies, and then both of these companies can show that money as their revenue, future projections, and get their share prices high up. I picked this image from a CNBC video, and that video talks about this circular nature of transactions, that every major tech company is being associated with each other, and this is driving a major part of stock market in the US. If you remove the big tech from the stock market, in the last 10 years the stock hasn't moved anywhere. Okay, so all the share prices that has been risen over the last decade in the US market, it's all because of big tech. And when you go to the bottom of this financial cycle, you see that all of this is not real, and it might just come crashing down anytime, just like it happened in 2002, 2008, and then same could happen in next 3 to 6 years. We just don't know when. Now this begs the question, are we seeing this for the first time in the world? The answer is no, this has happened before. This is a chart of total US venture investments over the years. As you can see that there was a time in 1999, 2000, 2001, in that time period that VC funding grew from 7 billion to nearly 100 billions in 2000. And then internet companies received 80% of all VC investments. By the end of the market downturn, stocks had lost $5 trillion in market cap since the peak, and all of that value came crashing down. And then again, it slowly builds up with real monetary value over several years. And then this chart is till 2017. Now what is happening, you can just guess that these kind of deals are happening randomly, and we are again at an all-time high in terms of US venture capital investments, and this time it is all happening in new age AI companies. Yeah, so I just said that without big tech, the stock market would have been flat for 2 years, and then over the last 3 decades we had a global financial crisis each decade: .com, global real estate, pandemic. This was a black swan event. No one could have predicted it, but in this period, huge amount of new money was printed, which resulted into billionaires' wealth being skyrocketing, and then for the rest of the world, the money becomes cheaper. This decade we are going to have a fourth one probably. AI is getting huge, as even countries like US alone has invested more than $350 billion in AI. And then we also, so what happens when this crashes down? We might see a lot of unfinished data centers. This is one of the most expected thing that could happen. If you look at China, what happened there is they built huge number of cities that no one lives in. This happened in Middle East, around the world, where huge investment was made into something and then it resulted into nothing. So China has built hundreds of AI data centers to catch the AI boom, and currently many of these data centers stand unused. At the moment, there is huge demand for compute, so they might be put to work at some point, but then there could be a scenario in the future where a huge data center that was being built, all these announcements that are happening around the world, that hundreds of millions of dollars are being poured into building data centers, they might not become a reality for many years to come. But then making these commitments, making these investments for the time being puts all that growth into share market, and that is how investors mint money. So what's the end goal of AI? So right now it's very hard to say. We were told that it will automate boring work and then humans will have a lot of time for higher pursuits. I don't see that happening. No one sees that happening. In fact, what is happening is that AI has convinced a lot of people that they don't need manpower to do job, which is leading to fewer number of employees getting more work. And then we are also far away from any utopia. There is no utopia right now in terms of AI. Maybe it's a utopia for anyone who is being involved in that circle of financing, and for anyone outside of that doesn't have that utopia feeling. But also, it's not all wrong or bad. There are certain things that might break the circular cycle, but to some extent there is still a huge circular cycle. And at this point, even Jensen Huang of Nvidia has started selling his shares, and we might just see it happening more and more. We are in 2025, end of it. By 2030 we might come back and revisit and see, oh, that was such a crazy time that any company that said we are an AI company raised huge amount of money, and then it all went crashing down and had no outcome out of it. But let's see a few pointers where this cycle can break, and it can also turn into like a positive scenario for most of the players in it. So let's talk about how the loop breaks. Currently it's all circular, but the loop becomes productive in a few scenarios when it happens. One, there's a lot of value being created in non-tech sectors, or the AI startups make more money from the revenue than from the customers than they're spending, or open source models reduce dependency on big players. But that might not happen because all the big players have compute, and open source model has to run on that compute. Cloud cost drops. That might happen if there are a lot of data centers around the world which are being built right now. So in these scenarios the loop breaks, but the amount of circular funding that has happened in the ecosystem, it is safe to say that a lot of that will come crashing down in next few years. And lastly, why does it still matter? It's not all bad. It's not like let's abandon all of it. It's not all bad. We are building infrastructure for future real world adoption. It might be a scenario in the future that every kind of sector is using some sort of AI powered infrastructure, and at that point it all makes sense. The current investment also accelerates innovation in terms of model efficiency, in terms of how we build new compute. This is a VC speak, like it filters out weak players, but when the amount of funding is so high, it's really hard to see who is a weak player, who is not a weak player, because the funding keeps everyone going for a long amount of time. So this, in a lot of ways, is similar to the dot-com bubble, but then dot-com bubble was the reason that which funded massive internet infrastructure and then adoption. And as a result of that bubble, we today have YouTube and a lot of means to interact and engage with the world. So that is what I want to talk about in this video. There are a few interesting Reddit threads I came across while researching, and I'll quickly show you a couple of those and then see you till the next one. So this is a very interesting data. I saw that this is Nvidia's market cap, and then this is the combined market cap of a lot more other companies in traditional sectors: Lilly, Johnson & Johnson, AstraZeneca. So these are all big pharma companies. Total combined market cap of 4.2 trillion, and then total combined market cap of Nvidia itself is 4.6 trillion. The funny thing here is that if you combine the profits or just if you combine the revenue of Johnson & Johnson and Lilly, the total revenue will far exceed Nvidia's revenue. So this alone proves it that the current market valuation of Nvidia is not true, it's not sustainable, and then we'll see what happens to this in the next few years. And then this is that second Reddit thread which I found really interesting, that China built hundreds of AI data centers to catch AI boom. Now many stand unused. There are a lot of caveats to this article. If you read it in depth, you'll also see that some of these data centers don't have the high-end tech that is needed. That is why they're not in use. Some of these data centers are in region which are far away, and that's why they're not being used. But probably they might find usage in coming few years. And then there are a lot of interesting comments, discussion that is happening here. So much fun. Okay, that is all for this fifth video. I hope you liked it. I had real fun doing all this research. Okay, again, interesting Reddit thread. I'll put this in the link. Anthropic is bleeding out, losing money on every Claude Code sub. Highly recommended. You can read this. So yeah, next video I'll talk about some other interesting thing I came across. I am having a lot of fun creating these videos, and I hope I continue for next 30 days at least, and then see where it hits. Thank you so much. Bye.